Well, Pete, welcome back. We're about to fire another trading week. We've seen the week that was. We're about to talk about the week that will be. What signals do we see flowing into Friday, the weekend, and coming out of the weekend? How are we shaping up for Monday?
Well, good morning. Well, we saw a very interesting week. It was all over the shop, volatility, and of course, where those US equities ended on Friday. So we saw the Dow well bid up, Nasdaq was off, S&P 500 was up 0.1. So that momentum, is it going to be maintained this week? We've got three central banks meeting, Bank of England, the Fed, US, and of course the Bank of Japan. So there could be further push up. The big storylines as far as yields increasing, I think, ahead of every central bank's
meeting later in the week,
yeah,
or the various...
and their own interpretation of where the market should be. So that's a concern from an inflation side. Are we going to see, again, any rhetoric coming from any central bankers that puts a level of, I think, distaste to the market? And they've got to be careful as far as the way they frame their responses, because naturally, when Jay Powell presents to the market, we've got that meeting 16 and 17 of March, which ends, you've got St. Patrick's Day midweek. So that, I think that general feel, how it's portrayed to the market, is going to be very, very fascinating. That's what traders will be looking for. Where does the Fed and what do they actually say?
Well, we'll see. We'll work that out throughout the week, and I'm sure they'll tell us, come Friday or thereabouts. Mate, surging bond yields continue to preoccupy investors who are concerned a little bit about the excessive inflations amid the wave of stimulus that's playing out, as well as the vaccine rollouts. If we take that a little further, there were smooth bond sales last week, which somewhat eased concerns on the fixed income yields. But again, as we saw, they spiked on Friday. But if we take something away from that, what does that suggest to you?
I feel as though, Will, the uncertainty as far as that huge run-up with oil prices and going in from an inflation side, it's got to spook the markets a little bit and create that uncertainty. We've seen a big sell-off as far as yen back at 109. We've got from 104. We've got the Aussie at 77.5. We've seen British pound being sold off, euro being sold off, that US dollar index sitting at around about that 91.6. So what happens from the currency trade? What happens as far as bond yields? Commodities have been a little bit of sell-off as far as base metals, and that crude market has been whipsawing over the last probably week and a half. So again, from a trading perspective, and that's what we want to see movement. It's been a delightful time, and if the first 10 weeks of this year we got 5 of those over the year, I tell you what, our traders would be the happiest traders in the world.
Oh, wouldn't they just? And as you said, look, China industrial production and retail sales due out today.
Yep.
We've got the Fed Chair, Jeremy Powell, Mr. JP, as you suggest, looking at his commentary later in this week. And in fact, it's Wednesday. Rate decision in England, Thursday.
Yep.
And
big week, Will.
Yeah, huge week. And then, as you said, the Bank of Japan, the monetary policy decision with the governor on Friday. So huge week.
Well, that's exactly right. And what happens as far as that yen? Do we see a 110 handle? There's no doubt that the stimulus, as you mentioned, as far as vaccine rollouts, all of this, there's that much news to take in. So if you're a trader, and I don't try and give anyone a PhD thesis to read, they're getting so much information, so much knowledge. You've got to look at your fundamental analysis, you've got to look at your technicals, and you've got to identify the trade duration of what you're trying to achieve.
Sequence and timing.
Absolutely, in the sense of not trying to marry a trade.
Mate, I'm going to draw your attention to the chart we've got up on the screen here. It's the US Treasury yields. Charts are up, obviously, it tells its story really. The bond market rout's causing havoc in equity and FX markets, and again, signals and stimuli and sequencing.
Exactly. So all of that is a concern, and that again creates that opportunity. Look, where does the US dollar trade? Does it continue to, we saw that stimulus come on as far as Biden, 1.9 trillion. So that's washing through the markets. I think a lot of it was already baked in, but that may continue as far as adding a little bit further horsepower to that US dollar. And that creates, again, volatility across currency markets. And that's what XM's all about. We enjoy seeing that volatility. And I made reference to it, marrying a trade, just for our new listeners. I'm not suggesting you got to hold something for infinitum. You may be in a market for a matter of minutes or hours, maybe not decades.
All right, Pete, well, let's take a look at this one. We spoke earlier of the Bank of England's policy. Here's the next move. It's expected to be up, and that's pretty much what this chart's suggesting.
Yes.
You'd hope it goes somewhere.
Well, exactly, and that's the point. there's no doubt that that inflation curve, and all of a sudden it could be off to the races quicker than what we expect. Let's see how the rest of 21 plays and what happens as far as all of those inputs to the commodity sector and as far as inflation, because you've seen that reinflation as far as asset prices, and we've got a domestic market here that's really, if you look at the Sydney real estate market, it's out of control, and we've seen that in New Zealand. So all of those points, I think, rolling across asset prices, are banks going to take or central banks going to take a close eye on that?
We'll come back to a question we covered off earlier. You know, we spoke a bit about bonds, the yields, and the markets, and are they moving too quickly? I mean, and can we actually, are we going to be ready to take advantage of a market if it's moving at the velocity that it is, particularly on asset pricing?
Yeah, exactly. I mean, I always look at the crude oil or copper market, and more importantly crude, as a real input cost, but the reality of where the market's sitting, and that $20 to $30 a barrel was like, okay, now we're at 70 or close to it, and you're going, that really impacts consumerism. So it takes so much extra out of the wallet, and I don't need to be an economist to really explain it any other than if the prices of everything increase due to transportation, then that really is a
real signal.
Well, not only a real signal, but a blast off for that inflationary concern.
All right, let's dive onto this next chart here. We're talking about the 10-year JGB yield. It looks like it's pressuring the yen.
Absolutely. We're now at 109 against that US dollar. It was down at 104. So where we run from here, Will, could be, that 110, 112 handle. It's had a big move, and it's been a delight for Mrs. Watanabe and all of those Japanese yen traders.
Well, I want to throw something in here. I mean, the world of semiconductors, little known to many over the last few years, is now probably first and foremost on many people's minds.
Yeah.
We'll get to that in a second, but just think about that for a minute. People talk critical supply chain. They talk about the things that we need to ensure security, and the little old semiconductors having a bit of a resurgence and a bit of a run all over the globe, on the east and the west.
That comes down to the technology, and it comes down to just simply 2020 was a wipeout of a year, and we're really seeing, as you mentioned, that resurgence. So that doesn't surprise me. Supply chains, everything being re-engaged, and that's why 21, we don't know what the next 9.5 months and where it takes us, and what surprises have we in store. We're only 10 weeks in. We've got 42 to go. I think it's going to be a long year and many different moving parts, giving us all different signals: interest rates, inflation, what happens geopolitics, where does the vaccine, what are the concerns leading into ECB, Europe, tourism, all that sort of stuff.
Well, Pete, let's answer that by taking a look at this chart here. Yields are back a little bit from highs. The question here is the rally over? We're talking about Australian, New Zealand and Canadian 10-year yields.
Absolutely, and they're three prime commodity trading currencies. So yeah, it's the storyline. We've seen big push-ups over that really last 6 weeks, and does it continue, or do we just see it, level off a fraction? When you look at a chart like that, that really is a wake-up call, and you saw that up until the end of Christmas, Deck 31, and then all of a sudden it's been off to the races, and that is a concern to any central banker.
All right, US 30 index, this is the cash, it's a 4-hour chart. Mate, what does it tell you?
Well, that's the Dow, and it's just been onward and upward. It just breaks records, and it continues to break records. What I'm intrigued by it, Will, I was looking at that this morning, and it was 32,700 or whatever. I didn't write the number down, but it was up 0.9. It was only a matter of a very short period of time ago, and it was at 30,000. I thought, wow, that magic number, 30,000. Now we're nearly at 33,000. We're nearly up 10% in a very short period of time, and you've got no inflation. What on earth is going on? So their forecasted earnings and forward earnings and PE ratios, everything is going through, I think, a large change, and that's going to maybe be on hyperdrive for the rest of this year.
Well, let's bake this in. AUD Japan.
Yeah, we talk about that Aussie dollar, and we saw the yen, and that yen really came under some pressure against US dollar and also against that Aussie dollar. So the cross rates have been a trader's delight. Technical analysis, fundamental analysis, seasonality. I think we need to do a little talk on that, maybe over the next week or two, just a discussion for a 10-minute chat to talk to our clients and, more importantly, give them those key frameworks to go, aha, that's what I need to look for. What does that mean? Oh, seasonality. What does that mean? Oh, religious festivals, Easters. We've got Easter coming up. We've got the Christmases, you've got the Lunar New Years, you've got the Ramadan, you've got these big breakouts that greatly impact the world. Then you've got the seasonal, and then you've got technical analysis as identified there on a chart with moving averages, RSI, stochastics, and Bollinger Bands, to name a few. And then you talk about what happens with the fundamentals that we're talking about. So you can see where it gets a level.
Plenty to talk about, plenty to discuss, plenty to learn, plenty to actually remember, Pete.
Yeah, and I think that's why you need a little bit of a journal, that when you make a decision you want to either go long or short in a market, Will, you've got to write down for your own sake those key points. Why am I following that? Why am I making that decision now? And that gives you a sense of reference that you can refer back to in 2 hours or 2 days. I made those decisions because of those particular criteria. I saw that criteria, I examined it, and that's what I came up with. Remember, traders, it's a lonely life. They're sitting there, a lot of them on a phone or in a bedroom by themselves, male or female, and they're making those decisions by themselves. And they might be on chat rooms or whatever, but they're still having to press the button. Am I buying or am I selling? And that's key to all forms of trading.
Well, there's an inflection point, and there's a great point to wrap, Pete. So, mate, thanks for covering the week, setting it up for us and briefing us on what's about to happen. We'll talk to you next week.
Thank you, Will.